Hi, everyone. If you've been paying attention the last few days, you've probably heard of the comp token. It is a governance token for the Compound protocol. It is being distributed to lenders and borrowers as an incentive for them to participate in the 9 different markets across the Compound protocol. And so the idea is that those that are participating are earning this governance token so that they have a say in the future upgrades and proposals for the Compound protocol. So the way that this is distributed is there's 2,880 tokens that are paid out across the 9 different markets to lenders or suppliers and then borrowers. And it's paid proportionally according to how much interest is being paid to each of these markets. So you'll notice it's very uneven. The majority of this is being paid to Tether lenders and borrowers. It's no surprise Tether is the most liquid stablecoin on Ethereum right now. And so anyways, folks are participating in this market. And at this point, about 2,740 comp tokens are being distributed of the 2,880 every day to these Tether suppliers and borrowers. And then again, it's 50-50. So that's why it's 1370 here, 1370 there. Okay, so if you understand that, then if someone wants to accumulate the comp token, which does have a value because it trades on a market like Uniswap, where there's buyers and sellers, and ultimately there's a price that's agreed upon there by buyers and sellers. If we go back to Samyak Jain, who is one of the co-founders of Instadapp, he was posting about the fact that he had gone short on Tether, using DAI as collateral, using their own Instadapp tool for Compound to maximize comp mining. The idea here is that he is lending DAI to the Compound protocol, but then this has a collateralization factor of 0.75. It means that for every 100 DAI, you can borrow 75 DAI worth of value against it in other assets. So if I deposit, X amount of money, if I can borrow 75% of that, what they've enabled in Instadapp is a tool that is very appropriately named maximize comp mining. Maximize comp earnings by folding your position 4x. It's leverage. It's the ability to borrow and pay interest on what you borrow, but then you have more exposure, so you might win more if the market moves upwards. But then if it were to move against you, obviously you could not only lose money, but you could lose 4x, and then you could ultimately be liquidated. However, these are stable coins. So it's really interesting because they're all supposed to remain pegged to around $1. And so this is a clever way to use leverage to ultimately gain more exposure in the compound finance markets. And if I'm able to gain, 3 to 4x exposure of the total value of collateral I have, well, that means I can earn more of this comp token. And again, if that's someone's goal, I guess this is one way you could do it. This maximize comp mining tool, it allows you to do 3 different things in one transaction. And this is all because of what's known as flash loans. This is a superpower to be able to use this in DeFi. It's not something I would know how to use unless it had been coded up into a tool like this. But what they've enabled here is, let's pretend that I have 100 DAI, and I've determined that I'm going to borrow Tether, and then I'm going to borrow Tether, and then I'm going to swap that Tether for DAI, and then I'm going to deposit that DAI back as collateral. So notice if I put in 100 here, if I borrow 100 Tether, it swaps it to DAI, and then I end up with around 198.74 DAI. So now my exposure is more. Now I've got I'm earning as a borrower, but I'm also still earning because of the collateral I initially deposited. If we make that bigger or increase the amount that I'm going to borrow, well, now I am borrowing 200 Tether, but I'm depositing that once it's been swapped to DAI, I'm depositing it back, and now I have technically 300 DAI that's been deposited. So you can see here, that again, it's a very clear way for someone who wants to earn more comp to maximize their earnings of that. However, I'm being mindful of the fact that if I continue to increase this number and I go to 300, first off, this will get me actually liquidated. So this is beyond the threshold of what I'm able to borrow. So if I just decrease that by a bit to 275, I am able to do this. But I mean, as Instadapp puts it, it is quote unquote risky. Next question for myself then was, if I'm going to do this, or at least if I'm going to experiment with it, what am I able to collateralize or deposit first? And then what am I going to borrow? So when I go back to the market here, you'll notice it says CF0, CF 0.75. So I need collateral where it is collateral that is representative of one of these markets that's earning more interest, which if you look here, DAI is earning $470 of interest paid per day, USDC is earning 643, and USDT is earning 32,000. So these are the three top markets. I'm sorry, DAI, USDC, and that. Now, if we go back to this, the other token here, aside from DAI and USDC, that has a 0.75 collateralization factor is Ether. But Ether is only earning $14 of interest per day right now on Compound. So that tosses that one out. So now I am confident that when I look at this, whichever of these is earning the most interest, that to me is the collateral I might want to deposit. In this case, actually, there isn't a big enough difference here that I'm going to go ahead and swap my DAI for USDC. So in my case, I just decided to stick with DAI. So I've got about 100 DAI, and then now I need to decide, since I'm going to use this maximize comp mining and I'm starting with 100 DAI, what is the other asset that I'm going to borrow? And it needs to be a stable coin in order for me to use this the way that I've strategized using it here. So I'm going to have to borrow USDC or Tether then. And so I'm interested then to know, based on the amount of comp tokens being paid to the Tether market and the USDC market, which again, it's very lopsided. There's 2,740 comp tokens being paid to Tether lenders and borrowers, and there's only about 80 comp tokens being paid to USDC lenders and borrowers. So let's go to this spreadsheet, and what I've done here is I've just put in my two choices here, and I'm going to just quickly walk you through this, but in green is Tether because that's ultimately what I figured out has the larger return, 43.38% annualized percentage yield. So as we look at these different markets, first off, DAI. I'm supplying DAI. I'm going to put in, just for this example, let's assume I put in 1,000 DAI. Currently, the market for DAI has 24,600,000 DAI. And then there is 26.78 comp being paid across those suppliers in the DAI market. And so that means that 1,000 divided by 24,600,000 multiplied by the amount to be distributed across all of these lenders means that each day I am earning 0.001 comp. And then at this moment, comp is about $63 on Uniswap. So I'm earning technically 7 cents a day. So 7 cents a day, risking 1,000, or at least I'm depositing and lending that to Compound. And when you annualize that against what I've initially invested here, that's 2.5% annualized percentage yield. All right. So next up then, I want to look at the Tether market and the USDC market. And the big difference here is, if you notice, the gross amount of Tether or USDC borrowed, I mean, the Tether market is almost 9 times larger. And if I am going to take out a flash loan or use the comp maximizing mining thing in Instadapp, I'm going to end up borrowing 2,500 Tether or 2,500 USDC. Here's that big difference in the market. The amount of comp being paid to Tether borrowers versus USDC borrowers is what, 1370 versus almost just 40. So that's not a lot, but still, if you look at the rest of the numbers then, and you assume a $63 price of comp at the moment, I am earning in a Tether market by borrowing from the Tether market to start off. I am earning 0.047 versus 0.012 comp, which is, almost like 3-4x. And then here's my earnings according to, again, that price of $63. So it's $2.97 versus 78 cents. All right. And then there's the annualized percentage yield, which all makes sense. And by the way, I am measuring that according to this initial like $2,500 that I'm actually borrowing, but we're going to combine all of this at the end. Okay, so I figured out then that I'm going to go with Tether. So I'm going to collateralize 1,000 DAI in this example, and then I'm going to borrow 2,500, and I'm using that in this tool, although in this tool actually I only have 100 DAI, so it's a factor of 10 less. But let's say that I was going to borrow 250 Tether. And you notice here, I'm within the range, like I'm under this range of being liquidated. I might dial this down a bit, but just for the sake of this calculator, let's go back. Okay, so I'm lending to a DAI market. I'm borrowing from a $72.6 million Tether market. I have total exposure here of around $3,500. So I started with 1,000. And now, because I'm using this powerful tool, which is flash loans, that is built into the Instadapp interface here for maximize comp mining, I'm obviously now able to earn more comp. So instead of earning 0.001, I'm earning 0.048 comp per day. And that is this divided by this. So I am earning 44 times more than what I would be earning. I'm earning 44 times more just by using this tool. Okay, and so that works out to $3.04 per day, which is, when you annualize it, it's a return of 65.97%. That's based on initially risking or investing $1,000. That also takes into account the fact that with Tether, the rate to borrow is about 18%. So, it's not like I don't get to use all of this for free. I have to ultimately pay interest on what I borrow. And so in order to get to 3,500, I'm borrowing 2,500. I'm paying 18% on that, but I'm still netting out and earning 65%. So, or 66%. So this takes into account that I have paid 18% on 18% interest on the 2,500. And then last thing here is just to like bring it more into context. My 30-day return, my net return here, again, having paid the interest for 30 days on 2,500, which would be lent to me from in the form of Tether and then swapped to DAI and held in my DAI position, that nets me out at $53. So you have to consider all of that and consider whether these numbers are worth it. You know, is it worth ultimately me risking $1,000 knowing that if I bump this too high or there's some sort of black swan event, I mean, there could be a smart contract bug. There's all sorts of things, liquidity crisis, something goes wrong. I could be risking that $1,000, but I am earning 53.70, which multiply that by 12. I mean, if all of this remained stable, which it won't, if the liquidity pools, you know, stayed the same and the rates all stayed the same, like technically I could net out $644 over the course of the year. So, you know, that's a huge return here, but worth considering all of these risks. Okay, so now that I have worked through my comp earnings calculator, I've personally decided that I'm going to use this maximized comp mining for the sake of experimentation. I'm going to risk 100 DAI, knowing I could end up losing that. And then I am going to borrow Tether. So I'm going to borrow Tether debt. It's going to swap the Tether to DAI, and then it's going to deposit the DAI as collateral. So when I put in here 200 Tether, notice that my position then is going to be, when this is all over, my position is going to be 300 DAI. So I'll have 300 DAI in terms of collateral, and I'm borrowing 200 Tether. And then below, you can see again, this is a measure of how much more borrowing capability I have here against my collateral. So if we were to do this to 250, I can still do it. But I mean, I'm just not wanting to like test the threshold here. So I'm just going to leave it at 200. Okay. So we're all ready to go then. So let's go and hit maximize. Okay. So we're going to spend a gas fee. So gas here is going to run me almost $27. And that's because this is, there's a lot going on here in this like maximize comp mining recipe. So there's a lot of transactions. I think the disappointing thing is just that gas prices are so high, because you'll notice here, if I were to drop this to 5 Gwei, which this will never confirm, it's only $3.78. So what's really hurting me is the gas price. And I'm going to go ahead and check the ETH gas station. Cool. All right. So it looks like, I mean, I can get a transaction through if we do the gas price as low as 30. Let's go back to this. Click MetaMask. Okay. All right. So I'm going to spend a total of 31 Gwei in order to do this. Oh, and one other thing is, when you use Instadapp, they have what's called a DeFi Smart Account, DSA. That's what it is, a DSA.Instadapp. Anyways, it's a really just clever way of enabling you to do really powerful things like this. You create an account but that account, you're the only one that's in control of that account. But it allows me to do things like this on Instadapp. Otherwise, I wouldn't be able to do some of these things, with Instadapp. Okay, so I think we're ready to go then. Let's go ahead and try this out. Okay, I'm back, and it took about 5 minutes for the transaction to confirm. So you can now see that I started out with 100 DAI in collateral. I now am supplying 300 DAI, and then I have borrowed 200 Tether. By the way, pay no attention to this at the bottom. I had actually supplied 100 Tether already to Compound, so this was here in my account before we got started doing all of this. Okay, so now that we've done all of this and used the fancy maximize comp mining tool to do all that flash loan magic, let's go ahead and figure out how do we reverse it? Like how do I get out of this quote unquote risky position? So you use the recipe here, save, and this allows you to combine 3 different transactions into one. You can withdraw your collateral position. So my collateral position is DAI. That's the position that I was building by borrowing Tether, swapping it to DAI, and then having a larger collateral position. And then my debt position is Tether. So I want to pay back the 200 Tether. So when I'm ready to do this, all I have to do is just type it in, and that's it. And if you notice here at the bottom, the status, it went from what, risky at 49.87% to 0. So yeah, so if I wanted to basically end my comp mining experiment here, all I have to do is click save. I'm not going to do that in this video just because it's going to cost me more gas, and I am kind of interested to watch this continue to play out over the coming days. Okay, so that's it. We've covered everything. Just to recap, uh, I went to dsa.instadapp.io to get started. If you've never used Instadapp before, you create a DeFi Smart account. That's what DSA stands for. When you come to this website, if I click on Dashboard, one of the first things I'm going to want to do is I need to get assets into my DeFi Smart account, even though they're in like my MetaMask. I'm using this DeFi Smart account to do all these like magical things inside of Instadapp with DeFi. So I would have to deposit that. So let's say I've deposited 100 DAI. Now I come over to Compound. Then I deposited 100 DAI. So now I have collateral with Compound. Then I'm ready to maximize my comp mining, which is where I'm starting with DAI collateral. I am going to borrow Tether. Now, if you remember, I started with 100 DAI and I had 0 debt here in Tether. And so as I changed the numbers here, when I moved it up to 300, it showed that I would be liquidated. But then as long as I stayed under that, and also if the pegs hold, which again is not something I would want to take more chances with here, I won't be liquidated. Okay, so again, I finished that up then, and then I paid about $15 in gas. That's with almost a gas price of 30 Gwei. So that was here. So there's that. And then all of this magic happens to result in me having now 300 DAI lent and 200 Tether borrowed, which means that now I'm being paid a lot more comp than what I started out with. And then the last bit of this is, how do I get out of this? Like, let's pretend I'm ready to take back my collateral and pay back my Tether debt. I want to scroll down to the save recipe. This just does the reverse. It combines 3 different transactions into one. Withdraw my DAI collateral, swap the DAI for USDT Tether, and then pay back that Tether debt. So I'm gonna pay back 200, and that's it. So you notice here was, here was, a visualization of my my liquidation risk. And so I put in 200 here, and now that goes down to 0. Great, everything's back to normal. And I can hit save. And then in this case, I would be walking away with 97.50 DAI. So I started out with 100. Obviously, like my goal here is to get paid in comp, and that comp has a USD value to it, and it's trading on Uniswap right now for $63. So that's part of what is the assumed return here, and why really like I or anyone might end up participating in this comp mining.